While the rest of the public remains on the lookout for the newest iPhone, our next guest has a reminder about how strong services and wearables have been for Apple. Joining us from Scottsdale, Arizona is Albion Financial Group partner and CIO Jason Ware. Jason, good to see you. You see value in Apple stock. It's trading down slightly right now, but you seem to think this might be a good time to look at Apple and add it to your portfolio.
Good to be with you, Adam. And there's two rock star events going on right now. One is the Wealth Stack Conference, which I'm at right here in Scottsdale in the Valley of the Sun. And then, of course, it's the Apple event going on in Cupertino. And, we continue to look at the comprehensive information that Apple gives us. And the most recent quarter at the end of July, their aggregate business certainly slowed some given the iPhone and the dip we have there and the donut hole before the next launch of devices. But meanwhile, we have this great story in wearables. We have this great story in services that's holding up the business to some degree. And I think the stock is still fairly cheap and reflects that dichotomy in the business. So as long as Apple can keep a stable iPhone business, which we think they can over the foreseeable future, and they can add on things like services that everybody needs and wearables and all these multiple touch points with the consumer, then I think it's a good company to own for the long term.
So when you look at the events like today's, Jason, does that mean they don't need to wow people anymore?
That's a really good question. And, I think certainly the wow factor, and it was mentioned a moment ago with Dan, has come down some. I think in particular, this iPhone launch is going to be a little bit less exciting than the last one, just given the fact that 5G is on the horizon, likely in the second half of 2020. So if you're going to upgrade to an 11 now, what are you really getting? You might get a couple extra cameras. You might get a better processor. I think it's interesting that they're going for this wireless charging a la Samsung, which might be a needle mover for the device, as well as the shatterproof screen. So those are some interesting concepts for the iPhone. But at the end of the day, if you're looking to upgrade, maybe wait for 5G is an argument that makes sense. So I'm not sure there's a lot of enthusiasm around this one for that reason.
Hey, Jason, Jeff Mills here. Just a quick question. There's this narrative that's developed that the demand in China is falling. You saw iPhone shipments to China fall 14% in the second quarter. Do you really feel like that's a sustainable headwind, or is this something that's going to come and go? And like you mentioned, the valuation justifies that long term.
Yeah, that's a good question as well. I think it's something that's going to come and go. Apple seems to climb the ranks in terms of market share in China, and then they drop. And I think a lot of that is a function of pricing. I think a lot of that is a function of the options available to consumers in China. There's a number of pretty impressive devices in China that I think the consumers have a good reception to. So Apple has a different market they're trying to control in China. It's not like the U.S. It's not like Europe. So it's been more challenging, but I suspect a bit of ebb and flow. But again, I think that's probably something that most investors understand fairly well. And that's part of the reason that the stock does have a low multiples. That's one of their growth markets, and yet it's been very volatile.
Jason, I'm going to shoot from the lip here, but follow my logic. We just had Dan Halley on from Cupertino talking about Apple TV. We have Elliott Management yesterday buying into AT&T and already talking about, the merger with Warner Media was a mistake. Is there value perhaps maybe with Apple looking at acquiring Warner Media to add to Apple TV, because they would then get that portfolio of already created content?
Yeah, creative question. And I certainly think that the old saying content is king while trite is certainly true. So this idea that if Apple's really going to get further into services, and obviously early this year they announced Apple TV Plus, they're going to roll that out here in the fall. And I think a lot of investors on Wall Street are paying attention to how that's going to impact the services story, which is very important to the stock. So if they can build out content, they're working with Oprah, they're working with Steve Carell, it was mentioned. I think they have a pretty strong center of gravity in bringing in smart people, bringing in well-liked people, popular people in Hollywood where they can build up that content library. But I think using some of that cash they have on the balance sheet and indeed strong cash flow to acquire more content may not be a bad strategy for them. Although I do think that Tim Cook and co, they're very smart about M&A. And, if they think it's something they shouldn't do, then they probably shouldn't do it. They know more about that than I do. So I'll defer to them to make that decision. But content is certainly very important to the Apple story.
All right, Jason, thank you so much. Appreciate it.